Mortgage rates are going up. We've seen this since the second half of 2022. But there's a few things I want to talk about in today's video that I don't think it's that big of a deal. So make sure you stay to the very end as I explain why interest rates going up is not that bad. And if this is the first time you're checking out my channel, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Now, interest rates have been going up. We've seen it happen from about June, July of 2022. They went from about 3% to 6%, literally overnight. It's like someone flipped a switch and rates went through the roof. All of our buyers got scared. So many of the sellers decided not to sell their house because they were then, what am I going to do about buying? It's like the housing market came to a standstill in the month of July. All of our clients, our production went down fast. And it was a time that I think a lot of us were really asking ourselves, like, man, what's going to happen in the market? In the 15 years that I've been doing this, I've never seen something move that fast. So it definitely caught me off guard as far as our clients go. However, as the months started to progress, things got a little better. I mean, a lot of times we were still seeing rates in the mid sevens, but then they started to trend downwards as we got towards the end of the year. But why this is not that big of a deal is because for those of you that are serious about buying, you are now getting the opportunity that you didn't have in the last several years. And the opportunity is that the sellers are willing to negotiate. This is one of the biggest things that we've seen happen over the last 6 to 8 months. Many home buyers that wanted to buy for the low interest rate, they were forced to pay above what the house was worth. And sometimes it was as high as hundreds of thousands of dollars. And they were doing that simply because the interest rates were low. And honestly, clients didn't even care. They didn't even bat an eye. I remember during COVID, people were willing to pay $10,000, $20,000 above, and they didn't even think twice about doing it. If you ask someone to do that today, they would ask you 20,000 questions, and there's no way they're going to sign that contract. But interest rates have gone up. So because everyone was trying to chase the 2% unicorn, they honestly threw out a lot of their common sense because all they cared about was like, oh my God, I'm getting this really low interest rate and my payment's going to be really, really low. But, my house is going to keep appreciating in value. I'll make it up in a couple of months or maybe next year. But a lot of those guys that bought and overpaid, they're probably upside down in value on their house if they didn't put a significant amount of money down. So why interest rates don't really matter is because, one, you can negotiate with the seller today, and this is something you didn't see in the last few years. I've had clients get all of their closing costs paid for, so all they literally came to the table with was a couple $1,000 depending on their loan type. So how cool is that? Yes, your interest rate, your payment is slightly higher, but the seller is willing to credit you tens of thousands of dollars just to sell the house. So the mindset you have to think about is that as much as you as a buyer want the 2% interest rate, the seller wants to sell their house in a week with 20 offers. So every day that house sits on the market, every week it sits on the market, it doesn't get an offer, doesn't get a showing, that seller is getting more and more nervous. Now, as a buyer, would you rather have a nervous seller or would you rather have an overconfident seller that thinks that their house is worth 2 times as much as what you're willing to pay for it? You'd want the guy that's unsure because now you hold the cards. You hold all the leverage in the transaction because you have the one thing that the seller wants, which is the ability to buy that house. So take advantage of this time because we don't know how long it's going to last. A lot of experts have predicted that interest rates are going to get back down into the 5s towards the end of 2023. That may be a good thing. But if you're waiting on the sidelines, anticipating that, I need you to ask yourself, how many of your friends or family, people you work with, want to buy that aren't buying? Now multiply that by the rest of the country. Do you think that there's more pent-up demand on the sidelines than ever before? I think the answer is yes, because there are a lot of people that gave up buying a house last year the minute we hit that June, July part where people just said, forget it. Rates are too high. I'm not buying. They could have still qualified for the mortgage, but they said simply because the rates move that fast, I'm giving up on the market. I'm going to wait. I'm going to let it cool down, and then I'm going to come back into the marketplace. Just last week alone, we had about 60 clients reach out to us about getting back into the market. And I'm just one of hundreds of thousands of loan officers in the country that do this every single day. One. And I've had over 60 clients say, I'm ready to go buy. So think about that. If you're on the sidelines, You have to start acting now. You may not be ready to buy today, maybe 6 months or maybe in a year out, but this is where you have to start getting your plans in place to be successful. Now, as much as we talk about negotiating, the other thing that's really beneficial as far as rates going up is that it pushed out a lot of the would-be buyers of the marketplace. So because in certain parts of the country, you still had low amounts of inventory, there was still, in some cases, multiple offers on homes that were being sold. In fact, I did a podcast with one of my friends yesterday, Carlos Rodriguez, a realtor here in Las Vegas, and he mentioned that the median house price in Las Vegas went up from June through December. It went up about $20,000. So think about that. Interest rates went up. Everyone got scared. A lot of buyers quit looking, but yet the value still went up here in Vegas. That is why just because you read all these headlines that are sensationalized on the news doesn't mean the housing market's going to crash. In fact, I do not think it's going to crash. There is nothing out there that says that we're going to flood the market with inventory and you're going to see all these homes come down 30, 40, 50% in price. Not going to happen. And I've yet to hear one person on social media or anywhere else say where all this inventory is going to come from, so that way home prices do start to decline. So being that there's less buyers in the marketplace, you, Mr. or Mrs. Home Buyer, you have more time to make a decision on the house. You can be patient because you don't have to necessarily write an offer before you go look at the house. You can go and look at it this weekend, and it's still probably going to be available. And you can decide whether or not that's the right thing for you to do. So many buyers were in the market simply because they were chasing a deal. And when you look at where they are value-wise today, like I said, there's been a lot of articles that have talked about how upside down people are already because they were overpaying for homes. Think about in 2008, everybody decided to buy a house simply because it was so easy to get a mortgage. No one cared that the bank didn't verify your bank statement, your pay stub. No one looked at your credit. It didn't matter. If you had a heartbeat and a social security number, you got a mortgage. That's how easy it was. But everybody loves doing what everybody else is doing. And that's why people make fun of that and call people sheep, because you are literally following what other people are doing. You did that in 2008. You bought a house because your neighbor bought a house, sold it and made money. You weren't buying it with the real intention. You weren't a real investor. You bought off of pure speculation and you lost. Now, everyone that bought during COVID, they're okay because you still have to qualify for the mortgage, but you got a really low interest rate, but you overpaid for the house. So today, even though home values are starting to subside a little, they're starting to correct and normalize. Here in Las Vegas, you've already seen 2022 values already erode. So we're back to where home prices were in about 2021. Not that big of a deal, right? The media is going to try to tell you otherwise, but when you look at the true numbers, it's not that bad. Interest rates are starting to come down slowly because CPI, the Consumer Price Index, is getting slightly better every single month, which translates to lower mortgage rates. So things are slowly moving in the right direction. Now, when you buy, and if you're trying to time the market, you want to buy either on that downward trough before you hit the bottom and before you start to see things take off again. So if we are heading into that downward trough area, this is where you have to start putting your plan together. Again, you might say I'm 6 months out from buying or maybe a year out from buying. But this is where we can give you some advice to say if you need to work on your credit, maybe you need to pay down your credit cards, or you know what? Maybe you're absolutely in a great spot right now. You don't need to do nothing. Keep doing what you're doing so that way when you're ready to pull the trigger, you can certainly do so. Then at that point, it's your decision as to when you want to start actively looking for a home. So interest rates going up is actually a good thing because you can now negotiate. We've never had that ability in the last several years. You can be more patient with your house search. And just because you get into a rate today that's in the 6 or 7% range, that doesn't mean you're stuck in that rate forever. You can always refinance your mortgage in the future. Now, there are several things that have to take place in order for you to qualify for the refinance. So this isn't a guarantee that you can refi down the road, because I know some loan officers out there were putting out content to almost make it seem that way. You have to understand that there are still mechanics that take place on a refinance. You still have to qualify for the mortgage. You have to have the right loan to value in place. I've had a lot of clients in the past that bought a house, and then you know what they do after they buy the house? They go buy a car or they go finance something big. that they then have too much debt in order to qualify for the refi. So if you are looking at refinancing in the future, that's a conversation your loan officer should be having with you at the time of application. Or you should be asking these questions after you watch this video, because you want to know, hey, if I were to refi down the road, what does that even look like for myself? Because if you're in a 7% interest rate and let's say rates do get down to the fives, you absolutely want to be able to take advantage of that so you can refinance. It's going to save you a ton of money on your mortgage. So remember, whatever you get into today is not going to be the end all be all. You may not be able to refinance in 6 months. You may not refinance in a year because we don't know where the market's going to go. However, you still want to know what parameters do you need to meet in order for that to make sense. So make sure you understand your options and you're not just shopping for the lowest rate, because the lowest interest rate typically comes with the most amount of fees in order to buy that house. And any good loan officer should be able to show you at least 2 to 4 options on how to purchase. And then they can obviously run some scenarios on the back end to show you what a refinance would look like down the road. And let me tell you this, every good loan officer out there is keeping good notes of where all their clients are today. Because the minute interest rates come down to 5%, I can guarantee you're getting a phone call. If you're one of my clients, we will be calling you to let you know what rates look like to save you money on your mortgage. So this may be a 2-step approach for your long-term investment for your house, but just understand that it may not be just a one and done, that maybe some of the guys or gals that bought during COVID, they got a 2% rate. They don't need to refinance. But you know what's really crazy is a lot of those people are wanting to refinance and take cash out of their house, which only tells me one thing. They bought their house, they overspent, their credit cards are maxed out, and they need some way to relieve that stress. So when you buy a house, if you're getting to the market this year, do not make that mistake. Still stick to your budget, because when rates come back, like I said, you want to put yourself in a position to refi. If not, you will be stuck in that higher interest rate. So don't let these opportunities pass you by. Don't just go after the next shiny object. I've always said this on my channel. Go for the right strategy. Go for the right loan officer that understands how to get this done for you. That's how you're going to win in this market, like some of our clients are doing. And if you're ready to take the next step, you can send me an email. We can get an application going. But if you still need more information, check the description below. There's a link to my entire first-time home buyers guide that walks you through the buying process. And as always, thanks for watching, and I'll see you on the next one.